Hey folks, David Frost, LazyGapTrader.com. In this video, we're going to be talking about day trading, more specifically gap trading. Gap trading is the gift that keeps on giving, more specifically during earnings season. When companies report their numbers, stocks have a tendency to move in large amounts in one direction or another at the opening bell. That in and of itself creates opportunity for traders that are able to identify a specific price level where a stock is likely to have a reaction in the other direction. Saying it another way is, when a stock is gapping higher, if you're able to identify the level that a stock is likely to have a pullback from or find resistance at, that creates opportunity. On the flip side, when a stock is gapping down at the open, if you're able to find that support level where the institutional traders, for example, are likely to step in and defend the stock, that will create a price reaction in the other direction. If you're able to find those levels, then you too can trade the gaps, specifically the morning gaps, just like I'm going to show you in this video. What I do is I teach a course at LazyGapTrader.com. That course teaches everything we need to know about gap trading. It teaches us the morning gaps, and it also teaches us about gap fill trades that are another form of gap trading on an intraday basis. I also have a service where I send out my gap trades to traders each and every morning about 30 minutes before the market opens. So what I'm going to do is I'm going to show you the email that went out this morning to traders. We're going to go over a couple of the trades that hit their levels, and I'm going to explain them and help you understand why gap trading is a fantastic opportunity to make money in the markets with a repeatable and consistent strategy. So here's the email that went out this morning, and right now we're in the heart of earnings season. Today there was a lot of earnings reports, so there was a lot of potential gap trade opportunities. What I do is I narrow the list down to the few that I think are the highest probability of success opportunities. So this morning we had 6 potential gap trades, and 4 of them never hit their levels, or at least not yet as of the time I'm making this video, but 2 of them did hit their levels, and we're going to talk about those now. Sonic was one of them. You can see where I say gap lower, support levels are 21, 26, and I gave some secondary levels. Stop and profit target is about 20 to 35 cents. Now that's a minimum profit target. In my course, I teach how to get the most out of a trade possible by turning a winning trade into a risk-free, emotionless trade. Under Armour did not hit its level. Nielsen, NLSN, that did hit its level. We'll take a look at that one. JetBlue did not hit its level. Brinker, EAT, did not hit its level. And Swift, WSFT, did not hit its level. So we had 2 that hit its level and 4 that did not. So let's go ahead and take a look at the first one, Sonic, right now. And here's a daily chart of Sonic, and you can see the trend line running across the screen at $21.26. That was the same level given in the email you just saw. Let's go down to a shorter time frame so you can see precisely what happened with Sonic as it came into that level. So as you can see, the stock closed up here the prior trading day at $26.49, having an enormous gap lower. And look what we're able to do. I'm able to teach you how to find that level at $21.26 where this stock is likely to have a price reaction in the other direction. And you can see what happens. The stock never went lower than $21.12. That's within our stop loss limitation. And as you can see, just a few minutes later, the stock was already at a high of $21.74, representing a maximum gain just in a few minutes of about 48 cents. But if you held it, look what happened just a little while later. The stock was at a high of $22.27 for over $1 gain maximum in just under an hour. And by the way, as I make this video, the stock looks like it's setting up like it wants to go higher. In the videos, in the course, by the way, is a video-based course. I teach you how to take a trade like this and how to turn it into a risk-free, emotionless trade where you can get the most gain out of the trade possible. Where else can you learn in a course when a stock is down 20% at the open or at 20% at the level I identified, give or take? Where else can you learn how to find that level where it's likely to have a price reaction in the other direction? Not only was it within pennies, but we do this over and over and over again. You can learn how to do this for yourself each and every day. If you want to become a full-time trader in the market, you need a couple of things. You need a consistent and repeatable strategy, and you need the discipline and the desire to do it. I can help you with one, but you have to have the other. Let's go ahead and take a look at the other trade that hit its level today, which was Nielsen. Nielsen's another one that had a tremendous gap lower today, about 15% at the level of $47.02. Now this one actually went through its level slightly beyond the suggested stop loss area, and some traders may have got stopped out, and that's a form of trading. As you can see here, it made a low of $46.32. But just to display the power of these levels that I teach you how to get, look what happened just a few minutes later. It was already at a high of $48.96, almost a $2 bounce off the level. Now in trading, sometimes we get stopped out, sometimes we don't. We know that that's a function of trading. Trading is a business. What we're trying to do is we're trying to put the highest probabilities in our favor and have the highest win rate possible. And with my gap trading, the win rate is consistently in about the mid-70th percentile. Average win of about 3% per trade, average loss keeping it within 1% loss per trade. That's a winning recipe, and you can see here the level of 47.02. Look at the power of that level. Even though it went slightly lower, rocketed off that level, even though it came back, look where it came back to, right on the 47.02. It's the chart telling you that that price level is extremely important. I can teach you how to find these price levels in my course at lazygaptrader.com. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.